and welcome to the CNBC TV18 studios in the Reserve Bank of India, where in about 15 minutes, the Reserve Bank Governor will make the monetary policy statement. As we have been saying, it's a very divided market, with quite a few people were expecting a pause and quite a few people expecting a change in stance. At the moment, the change in stance is withdrawal of accommodation. The expectation is that the governor may say, we have withdrawn accommodation enough and now we go into neutral. People will read that as a dovish sign. As we have moved towards the 8th of February, number of people who are expecting a hike have increased. So it's not now very deeply divided. The majority is expecting a hike, but well, a much bigger majority is expecting it to be the last hike. In any case, whether the governor indicates this is the last hike will be something that will be watched. Also important, whatever he says on liquidity and on the currency, if he chooses to say anything. Well, I have with me an elite panel to guide us through what to expect and what we should watch out for in that statement. I have Kaushik, the chief economist at Deutsche Bank; Parul Mittal Sinha, she heads financial markets and macro trading at Standard Chartered India; Saugata Bhattacharya, chief economist and vice president at Axis Bank; Abheek Barua, chief economist, HDFC Bank. Gentlemen, and Parul, thank you very much for joining me. Abheek, what would you actually watch out for in what the governor says?
I think I would watch out for I would sort of look at the language very closely, because my sense is that the inflation battle is not over yet. And let me just point to a couple of things. One is that this is the first policy in which the China effect, the positive China effect on global growth and commodities will have to be acknowledged. Number two, although the budget is, has gone in for some degree of fiscal consolidation, there is a strong element of demand push in it. Number three, although inflation rates at the headline level have come down, there is really no macro narrative to really convince us that monetary policy has worked to bring it down. It's largely because of certain food categories that it has abated. So given all this, even if they pause this time, I think they have to be very careful about signaling to the market that they are not done and dusted. So I think that is the guidance I would tend to sort of look for, and look at the language very closely.
All right. Kaushik, hi. This is Ritu. What are you watching out for? Are you penciling in a 25 basis point hike? Are you expecting any shift in the stance of the policy this time around?
Hi, Ritu. So we are going with a 25 basis points rate hike call. But as per our own assessment, I think this rate hike could have been avoided. But the way RBI has sounded concerned about the core inflation part, we think that RBI will come and deliver a 25 basis points hike, which would take the repo rate to 650. And if you remember that from February 2019, when we had the first rate cut, repo rate was at 650. So we came down to 4, and then we are just going back to 650. So that would seem consistent with the view that we had throughout last year. Only thing is that RBI has front-loaded a lot of rate hikes in last year. We've had 300 basis points rate hike almost in 2022. So if they wanted to avoid this rate hike, it could have been avoided. I'm sure the decision will be not unanimous. There would be dissent, and you'd get a split verdict on the rate hike, but probably the majority will still agree. I would watch out for the new inflation forecasts that RBI will give, because October, December inflation has come 50 basis points lower than RBI's forecast. So what is the forecast they're giving for April, June, and July, September? They've given 5% and 5.4. Whether they bring it down below 5%, our own forecast is below 5%. And then in that context, what is the positive real interest rate that we are going to have with, say, policy rate at 650? So beyond that, whether RBI is signaling whether there is any need for further rate hikes, or will it shift its focus more on tightening liquidity and making sure that rates are on the higher side for a longer time? And also what Lata mentioned, the most important thing is whether you're changing the stance from withdrawal of accommodation to neutral, because neutral, as Lata explained, it's a bit dovish, since it also brings in an element of a possibility of a rate cut at some point of time. So we'll look out for all these.
Okay. Well, at some points in time, Kaushik, you're almost sounding like Dr. Verma, who has also been pitching for an end to the rate hike cycle. But a lot of people are worried that the last two readings of inflation, which came down, was almost entirely because of vegetables. As Abheek pointed out, we have had a lot of milk prices hikes. Cereals haven't gone down, and the Reserve Bank has brought in core inflation into its argument in the last statement. That one is standing at 6%. So over to you, Saugata. What are you going with, and what are you wanting to hear?
Thank you, Lata and Ritu. So 25 hike. I think other than all the conditions that you have mentioned, my fellow panelists have mentioned, I think the external environment has also turned in favor of a further tightening. Global conditions have become very, very strong. You've seen conditions in the labor market conditions in the US, in Australia, in Brazil, in Japan, France, you name the country. So economic conditions remain high. Global central banks will continue to hike rates. In India too, conditions remain very, very, demand conditions, aggregate demand conditions are very strong, very resilient economy. The PMI numbers, other numbers, despite some moderation, some signs of moderation, export orders are very strong, order books are very strong. So all of these things, we will see that the capacity utilization numbers will be even higher than that for June in the policy. As all of us have agreed that it's the language that will be because we are on the cusp. 650, our sense is that this is probably the peak. You will get a language, just like the other central banks, that we are going to pause now to assess the impact of all the hikes that we have done so far. My sense is we are not getting into neutral as of now. But my feeling is exactly as you mentioned, that there's going to be some tweak in the removal of accommodation. Maybe that we are in a restrictive territory, but we are not restrictive enough yet. So something like that. But my sense is, as of now, it's not going to be neutral. So they will signal that there is room for hikes, but as of now, we will pause and look for assessing the situation.
Okay. Okay, so as of now, it is 2:1, saying that they may not signal rates have peaked off just yet. Well, Parul, tell us also how the market is positioned. If the RBI were to hike rates and retain the stance at withdrawal of accommodation, do you expect yields to jump up a great deal? Tell us about the market positioning, please.
Right. The market has priced in the 25 basis points hike, and then this to be the terminal rate hikes. And no more rate hikes are priced in. In fact, market is pricing in a couple of rate cuts lower later down the year. So if RBI signals that this rate hike is not terminal, they don't change the stance to neutral, and are hawkish along with keeping the stance unchanged, that's when we can expect marginal increase in rates in the market, maybe a 5 to 7 basis points higher in rates reaction. On the flip side, if they do mention or change the stance to neutral, we expect that to be taken quite positively. In the last 2-3 sessions, we've seen rates harden. OIS rates have gone up by 10 to 15 basis points. We expect material retracement of that move and market to react quite positively.
Okay, we've broadly heard everyone's views on how the market is positioned, whether there will be a hike or a pause, and what the stance could be. But Mr. Abheek Barua, coming back to you, on liquidity especially, what are you expecting to hear, and any other comments you'd be watching out for? Of course, the split vote of the MPC is one thing.
I think on the liquidity front, they will be careful in their communication. They have indicated, through the last few policies, that liquidity will be adequate. And they have kind of signaled to the market, in maintaining certain liquidity balances in the lab. They have sort of signaled what this adequacy means. So there is an element of wanting to support growth, wanting to support the government borrowing program built into the monetary policy objective. So given that, I wouldn't expect them to be more explicit in their liquidity stand, but reassure the market that they needn't be concerned about excessive liquidity tightening at this stage.
Okay. Okay. Well, actually, the excess liquidity has come down from their previous statement. As well, the TLTRO will expire in April, right? Or will be redeemed. So, Parul, your thoughts. Will you even get a look for a smell of OMO or something?
I think it's too early for RBI to comment on OMO purchases. And if we look at the data, they are selling bonds in the secondary market, although in very small quantums. But yes, on liquidity front, we think RBI has tightened liquidity conditions sufficiently. The interbank liquidity is near neutral. The core liquidity remains in surplus of around 2 trillion INR, which is close to the 1% NDTL level, which is still within the neutral bands. So from here, over the year, we expect liquidity to keep getting drained out. Like you said, the LTRO redemptions that happen, RBI may react by either doing OMO purchases or by relaxing or reducing the CRR levels to release back an equivalent quantum of liquidity for the market. But I don't expect any comments on this in this policy.
Okay, so you're not expecting anything on OMOs to be announced by the governor this time around. We just have about a minute to go. So, Mr. Bhattacharya, final thoughts on liquidity as well, and any other things that you would be watching out for?
So liquidity, they don't, I mean, the MPC is not a place for liquidity. I'm sure the LTROs maturing will necessitate a VRR, the variable rate repo auctions that will come in. Nothing on OMOs yet, but my bet is later on in the year, there will be OMO bond purchases. Depending on the liquidity, but as of now, nothing on liquidity and certainly no mention of OMOs.
So certainly no mention of OMOs. Kaushik, we just have a few seconds. So if you could sum up your thoughts as well.
So we think that the next, action would be on liquidity. It will be tighter on the margin so that the, money market rates remain higher than the repo rate so that RBI doesn't need to hike anymore. So if you are at 650 on repo rate, if the liquidity remains tight for a few months, you could have MIBOR at 650 to 675 range, which would do the job for it doesn't require any more rate hikes from RBI. And then as people are saying, depending on how liquidity evolves, whether some OMOs are required at the end of the year or not.
All right, Mr. Saugata Bhattacharya, Mr. Abheek Barua, Parul Mittal and Kaushik Das, all of you, thank you very much for helping us understand what to expect from the governor in the policy which is set to be announced any moment.